My name is Ilke Hoekstra, Chairman of the Executive Board of Royal Vopak. In 2020, we delivered good financial results in a more volatile business environment. We've outperformed on costs to defend EBITDA and delivered on growth projects, despite construction delays of some projects due to COVID-19 restrictions. The COVID-19 pandemic impacted the industry we serve. We've seen unprecedented changes in the supply and demand of gas, chemicals and oil, and subsequent response of our customers to their portfolios and supply chains. We have experienced an acceleration in the energy transition, and we have seen the high dependency on digital infrastructure. Our strategy is completely aligned with these trends, and strategy delivery progressed well in 2020. We continued transforming our portfolio for the future and invested more than 500 million euro in growth, resulting in an additional 1.6 million cubic meters of capacity to meet growing customer demand, particularly in Asia and the Americas. Good progress was especially made in our industrial terminal portfolio with the acquisition of the Dow terminals in the US Gulf Coast with our partner BlackRock. Our digital transformation is progressing well, and the pandemic highlighted the benefits of our leading digital infrastructure. We continued the rollout of our new cloud-based system for terminals as part of broader efforts to develop our digital architecture to support the industrial logistic change. Looking ahead, we're excited about the future prospects and keep our focus on performance and long-term value creation. We have momentum in capturing opportunities to serve large-scale industrial clusters and are advancing our efforts in developing infrastructure to support the energy transition. We continue transforming our portfolio and position our company strategically towards more sustainable forms of energy and feedstocks. We continue investing in growth and aim to allocate the majority of our growth investments to industrial, gas and new energies infrastructure. Investments in oil infrastructure will be reduced and mostly targeted towards strengthening our leading hub positions, while our positive views on chemicals has not changed. We are determined to bolster our leading position in our industry, both in service and sustainability towards customers and society. We continue to seek opportunities to reduce our environmental footprint and implement our sustainability roadmap towards our ambition to be climate neutral by 2050. For 2021 and beyond, we keep storing vital products with care to make a meaningful contribution to a more sustainable society enabled by our financial performance. Now, I would like to give the floor to our CFO Gerard Paulides for more background on our financial performance in 2020.
Vopak has adjusted quickly to the changing business dynamics of 2020. Our governance structure to manage the business performed well at all levels. Our earnings, measured as EBITDA, came in at 792 million, an increase of 20 million post-divestments, absorbing currency effects and an item related to our joint venture in Malaysia. We increased revenues post-divestments and delivered our cost efficiency measures to defend EBITDA. Cost management continues, and we expect to manage the 2021 cost base, including additional cost for new growth projects, at some 615 million. This is subject to currency exchange movements. Earnings per share came in at €2.42 for 2020. Our financial framework and capital allocation priorities are unchanged. We continue to invest in growth, service and our digital infrastructure. And in 2020 we invested 525 million in growth and aim to invest 300 to 350 million in growth in 2021. Our cash performance and balance sheet support continued growth investments and cash distributions to shareholders. Again, for 2020, we propose to increase our dividend. Looking ahead, we aim to grow EBITDA over time with new contributions from growth projects to replace EBITDA from divested terminals, subject to prevailing business conditions and currency exchange movements. In 2021, growth project contributions could increase by 30 to 50 million. Our resilient performance in 2020 positions us well and with confidence for 2021.